Hey guys, this is a specially recorded video to showcase how I have applied the key Nifty trading levels to initiate Nifty options trade today. Right? So this may just give you an idea how to apply these levels in real time while making or initiating trades. On the screen, these are the levels that we have defined for that which I have derived for 6th of May trading level, and where we have a last close which is the 5th of May close at 9205, and for this day we have demand levels at 9141, 9093, 9037 and 8928, and as well as supply levels at 9270, 9339, 9405 and 9450. Today Nifty has opened on a gap, opened on a flat note, and eventually gone down to test the level of 9115. Okay, 9115 zone approximately, and subsequent to finding the support and some buying support there, eventually it went on to take out another key resistance level which is 9339 on the upside, while making a high of 9446. Okay, now I wanted to show you how I have initiated a long trade using a strategy which I practice quite often, using these levels and applying them in Nifty options trade, guys. Right? So what I did was, once Nifty has finding some support at the lower level and taking out 9339 and cooling off and coming down just around 9270, I have looked at the open interest pertaining to the 7th of May expiry, visualizing what are the strikes where you have highest volume as well as active participation by the market participants, which is typically with the help of the open interest. Then I figured 9500 is the most actively traded contract for the 7th of May expiry, guys, which is quite actively traded contract, which is apparently around 2% away from the, or 2.3% away from the current price level of my assessment. That's around 9300 zone. So there came an idea for me to initiate a long trade on this 9500 Nifty options, which made me to look at a probable right entry on 9500 CE. So right, so this is a 9500 CE contract of Nifty. So what I looked at is, and this is the today's initial candle. You can see the spread here. So it has opened at 35, highs 35 and low at 11.95 and closing at 9.9. So apparently this is the first bullish bar on this option contract. Look at this. This candle has opened at 11.65, high made around 26, low at 10.55 while closing at 21.95. If you look at this, there is a spread of 16 rupees approximately for this. Okay, the spread of 16 rupees for this. So what I felt was this is my long trade initiation candidate. Although I have not participated in this initial up move, but I have realized I have a potential trade opportunity here, right? So what I did then was around 11:15 or 11:20 p.m. I have initiated a long trade on this contract at a price of 15 rupees and 10 paisa. Right, so let me show you the details of this. Around 11:49 a.m. so I have set in a request to initiate this long trade with a price of 15.1. Look at this, and this trade has filled up at 1:16 p.m. 1:16 p.m. and 7 seconds. 1:16 p.m. and 7 seconds. Let me just go back and then show you the candle of 1:15 p.m. If you go back here, okay, this is the the 1 p.m. candle which ends at 1:15, and this is the candle which starts at 1:15 and ends at 1:30. In this candle, if you look at this, at 1:16 my order has been completed, which is filled. Look at the low. This candle low is at 14.85, 14 rupees and 85 paisa. So my order has been filled and completed at this level for this specific bar, and eventually within the next bar making a high of 30 rupees and 85 paisa. So apparently I've also exited my trade on this bar. Let me show you my exit trade as well. All right, at 1:40 p.m. and 41 seconds, I have booked my half of the quantity at 30 rupees. Okay, so my idea for this was I want to make my trade cost free, meaning I would not incur any further losses or sorts. So this is the very bar I have exited my trade. Initiation is in this bar, which is 1:16, and exiting at 1:40 p.m. That's about 24 minutes trade, while the money is being doubled just about this period, guys. So what I was expecting was, I was actually expecting this to reach to the level of this, which is around 38 rupees into 45 rupees, approximately this level. So that's when what I did was I have finished, booked my half of the position and taken my cost away while riding the rest of the trade for these targets. However, that did not happen, and apparently I had to close my trade here. Why I closed here, although I wanted to hold this trade further, but I have closed this trade here, keeping in mind that I do not want to carry this trade for tomorrow, having tomorrow is being the expiry, and these options can have a lot of decay, and eventually this can even trade in a single digit. Hence I have closed this trade again at 2:29 p.m. rest of it at 13.4, thus netting around 8,000 rupees profit on this trade. Although it has a profit potential at one stage was around 18,000, but I captured around 8,000 rupees in it. Now Coming back to the trade setup and trade entry, why I have initiated this trade? What is the rationale behind taking this trade? Like I stated, my trade entry rationale was this bar. All right. So typically, why is this bar? When the Nifty tried to breach out 9270, which is again Nifty key level, I was affirmed that we are looking at a good trending day. Right. So what happened was then apparently it went on to test the Nifty. Nifty went on to test around 9346 level and then turned back, fallen back around 9270. At 9270, it was not breaching this level. However, it is witnessing some buying support coming in. Okay, so while doing this, so at 9270, which I had a firm belief that we will typically get a long entry again. All right, so this is the strategy that I have applied. So for this candle, as we talked about, this has the entire spread around 16 rupees. And for this candle, I have looked at as the median range of this candle, which is around 15 rupees, 15 or 16 rupees roughly. Apparently, if at all the market to witness the buying continually at 9270 support, the smart money players, those guys who are actually play with the options, in the larger scale, eventually melt down this price and bring it around this midpoint of this candle, guys. The midpoint of this entire candle. This is the first bull candle. So I typically look at this midpoint of this. This is around 15 rupees. So that's when I have initiated a trade at 11:49 a.m. for this trade at 15 rupees, guys. If you look at this at 11:49, this option contract was trading around 32 rupees, guys. Okay, around 32 rupees. However, I have expected this to come down for the so-called price of parity. So that is around 16 rupees because of this midpoint of this. So that's the reason for my trade initiation at 15 rupees and 10 paise. Okay, as I explained you, eventually it's went on to hit 30 rupees in the with the next immediate bar. I have closed my half of the position and made my the rest of the options free of cost. Right, so you can actually use Nifty levels to identify these trades with such kind of techniques, and eventually these can help you eventually can initiate wonderful trades which can potentially give you a blasting moves. Right, I hope this strategy can help you out figuring out good trades with the help of the Nifty levels. Right, thank you. I hope this can help you out. If you have any questions, feel free to get back to me. Thank you.